All right, guys. Hey, this is part 2 of the video about the same questions. What
was the question?
The questions would be, I'm really interested in investing. I've not done it before. If you have any more tips and how to start, it would be helpful. Thank you.
Okay.
So this is a part 2. So part 1, obviously the previous video.
Yeah.
Then this is the part 2. This will be understanding the different type of investment options.
That's a lot.
There's a lot of different ones, so I'm gonna name a few of them. Okay, so
that we have tried, maybe.
Yeah, some of them we have tried. Some of them is like this might be a good idea. This is just part of investment strategies that we've done it ourselves, as well as what I found so far. Anyway, so the first one will be, let's say, looking at property. In the property alone, if you're thinking of investing on property, yes, it's got a huge amount of capital required. There is about 4 or 5 different type that comes down to with property. We do it on residential. Okay, so there is residential property, houses, units, townhouses. Those are the one that we deal with when it comes to property. There's also commercial property, such as individual office or an office block. And
we
then
couldn't go to commercial because you require bigger capital.
Bigger deposit, like a 40, 50% deposit. Retail premises, such as shop, a hotel room or hotels.
Service apartment.
Service apartment, there you go. Yeah, industrial properties, such as warehouses.
I would love to have one.
But as a starting point, most people bound to go on residential. Car park.
Car park.
Well,
not much
depending which country you're in.
Car park, but I don't know. In Sydney, it's just no capital growth. Not much. Not much.
Something small like a studio. That's where usually when you're starting in a property. The next, so that's in the property side of it. So, and the next one will be shares. Now, in shares, there's one individual, like say you put a couple of $1,000 on Amazon, Apple, Netflix. In Australia would be BHP. Or something.
But then the downside for that is you have to buy whatever value or number of share. So let's say a share is $100 per share. You have to buy, let's say 10 of them is only $1,000 worth is 10 units only.
And some of them, let's say, it could be like Amazon. I don't know how much is Amazon. Let's say it's a few $100s for that one share. Well, if you only have $100, you can't buy that one individual share until you have the fund to buy it. So another one would be ETF. So exchange traded fund. Which the way I look at ETF is, I guess, a pool of companies. And you're buying only a portion of that
each
company.
Of them.
Say you have 10 or 20 or 50 and that's our cat coming in. And you get a pool of that. Next one will be managed fund. So, which is the same thing, similar, but it's
the handpick of each stock.
Correct.
Well, that fund, the manager, they will sometimes sell or buy some other stock out of your control as well, just like ETFs.
Correct. Index funds, so such as what is it? A typical index fund?
S&P 500.
FTSE,
DAX.
Those are another which we did.
Future trading
at one stage.
So index fund is also like a group of the top, let's say S&P 500 in America is the top 500 companies.
In Australia,
you trade in there. Also
ASX,
200.
ASX 200. So 200 of the best company in Australia. Nikkei, which is in Japan. What's in the UK one?
FTSE.
There you go. The other one would be margin lending.
Never tried.
Don't want to explain it.
Just watch, like when I was young, watch the movie and all, margin call. It's just a bit too much. Don't get into margin if you don't understand, please.
You got to do your own research.
Anyway, that's one of the options.
We haven't tried this one as well, the CFD. We tried a little bit of that.
We tried before, and similar to margin call.
Yeah.
Margin call, margin lending. I mean,
yep. Future trading, day trader,
but
future trader.
That's kind of leverage too.
Yeah.
Yeah.
So, and then the other one would be commodities such as coal,
gold, oil.
Yep, oil, silver, those type of things. That's on the, I guess, in share. I'm sure there are bound to be a lot more, but that is, I guess, some of different type. So you can buy individual. You can buy a lot of different version of it. I say.
Anything that you can think of.
Yeah. Another one would be a fixed interest. So fixed interest probably, I guess, the starting point for some. Just gaining an interest on your own money, let's say.
It's not investment though.
Well, it is kind of, but it's very low risk.
Yeah.
Low risk. So
I don't count this as investment. I'll say it's saving.
Yeah, it's a saving, but you're understanding the fundamental of it. Like if you're looking at it, like say, for example, term deposit, government bonds, and corporate bonds.
Yeah.
Those are the three main ones. So term deposit is where you give your money to the bank for a certain period of time, and they provide you, let's say, 2% on your money. You know, but you got to lock it in for 12 months or something like that, as an example.
But it's low risk, but it's kind of guarantee.
Yeah, a guaranteed income.
You should park some of your money in there for sure. We do it too.
Yeah,
we park our emergency fund in one bank with a high interest.
Well, it's better than nothing. That's how I look at it. That's our emergency fund. If we can get an extra dollar here and there, why not?
Yeah.
But if you don't, well, at least you learn the fundamental of earning an interest, or earning an income from them. This is probably the lowest one. It's high interest saving account.
That's the one we have?
That's the one that we have, which is very low, very safe. You know for sure you can withdraw your money in and out pretty quickly, and you're not gonna lose as far.
No. Well, in Australia, the bank we bank with, so anything under $250,000 is guaranteed.
Yeah,
to be in there,
to be in there, even to be safe for them.
Yep.
So, and you're only earning very minute, very minute.
2% at best, 1 point something now per year.
So, as a whole general anyway, understanding the cost of investing, whether it's for you to learn on the whole entire system. I mean, we learn day trading. It costs us like 2 years of our life every day for about 2-3 hours a day.
Yeah, a lot of time consuming. We're thinking to have day trading to replace our
lifestyle.
job. Yeah.
Yeah, because there's always this good bit on the lifestyle that we got sold on, emotionally invested on it, and we're expecting to do it within 2 hours every day. Understanding the cost of that, the cost of maybe trading, like if you do individual share trading, you're bound to have some sort of administration fee. Let's say to purchase a brokerage fee will be, let's say, $20 or $30, depending on
how big is the trade.
How big your trade, how much your capital, and all that jazz. The time that you're looking at investing.
Now we don't have much time for that. Used to spend a lot of time, thought that we can get the money back.
And then understanding also the admin fees, management fees. In each product and services, there are bound to be some sort of fees. Understanding that, like for example, on Raiz invest, let's say if you have less than $5,000, there are fees.
Spaceship.
No, in Raiz, if it's under $5,000, there are fees that is attached to that.
Oh, is it?
Whereas Spaceship under $5,000, there's free. There's no management fee for that. So we will, and sometimes this is the reason why I think we put a lot more on Space, because there's no management fee under $5,000.
And the return is pretty good so far.
Yeah, because sometimes when you don't read that, the fees, the costs, it would chew up your return. Let's say your return is $2 or something like that, and then your management fee is $5, then you're still out of pocket.
Yeah, that's right.
So the trading costs, which I mentioned beforehand, how much is money coming in, coming out.
Yep.
The learning time, like at least give it 12 months.
Yeah, I think so. You start small and learn it.
Yeah. at least minimum is 12 months to understand how you to deal with it when it goes down. How do you deal with it when it's making a profit?
Learn from you, right?
Yep. I mean, during the pandemic, when the first time I saw all of our portfolio just going down, that was scary. Yeah.
Well, imagine that if we stop at that time and now look back.
Yeah.
You kill yourself.
So as a overall, understanding your risk tolerance.
Yes.
So
depends on your age, depends on how much you can
lose.
Put it in. I won't say the lose. It sounds like gambling. I won't say lose. How old you are, of course, the younger you are, the higher risk you can take. And also how much you can invest and time and your emotion. I think there's a lot of emotion that people don't mention when you're in investment. Because when you lose your money, or even it's paper money, just on the paper saying you minus $1,000, emotionally it's really hard.
Because you work so hard to get that
money.
$1,000, and it's after tax, so you work after paying everyone. That's your hard-earned income, so it makes it hard.
Just like a tree, because we always explain to our kids it's like a money tree. What if you're trying to plant a seed? The seed is not growing, it's dying. Would you be sad? It's the same thing.
So, and overall, understanding your strategy and what are you trying to achieve with your money. For us beforehand, when we're young, yes, we're trying to get rich quick scheme in a sense, getting a quick fix to get the money quickly. Because you want to do this, you want to go holiday and all that jazz. And then I'm realizing to ourselves, like, that's not working. So instead of that, we changed our strategy to get rich slowly.
And boring.
Yeah. Really boring. Really boring.
And very slow when you don't have enough money to put it in.
And so, most people say like, oh, I earn this amount, I earn that amount from my, whatever capital.
My investment.
For my investment, like.
I do a renovation for that. I made 100K in 6 months. It's all these.
The time.
Media, the article, dramatic story, people telling you and trying to get it. Yes. It works, but how many people can do it? You need the capital, you need the skill. But what we're trying to do is just everyone can do it. Just start small.
So with our portfolio anyway, with our Spaceship and Raiz and all that we've been showing you guys, I started only $15 a day, and then I gradually realized, you know what, there's a potential in this where you can actually earn more what your weekly average income be. So okay, then I'm gonna do it and see how much it's gaining. I mean, overall so far now, what was it, $1,000 a month?
I don't know, for last month. Last month.
Last month alone, we just did our budgeting. We try and figure out if we make money this month. And so just on Raiz, Spaceship and Comsec, it was about, what is it, $4,000 more than capital, I think growth. Anyway. The growth, which is
not only capital, but because we also put on capital, we very minimal,
very small, like $10 a day, $20 a day. Sorry.
$20 a day only. But then now I think combine our account grow up to $72,000, something like that. But then compared to last month, we already made capital plus the return is $1,000 a week.
$1,000 a week. It doesn't feels that much
because it's just on the screen.
In paper, on the phone, or it's not in paper. It's in the screen.
So old on the paper.
So before I don't understand the concept of this. Oh, paper loss. What does that mean?
Yeah, he's on the paper now. Screen lost.
Screen lost.
Let's make this word up. Screen lost.
So. I think that's it for us. If you are thinking of starting, hopefully these 2 videos will help you guys out. Anything else?
That's it. Pretty helpful, hopefully.
Hopefully this is pretty helpful. If you guys have any further questions also, once again, send us an email direct. I will leave our email in the description or so. Don't forget to subscribe, comment, guys, and we'll see you
next time. Bye.
Bye.